Airbnb Inc., the world's largest short-term rental marketplace, connecting over 8 million hosts in 220 countries with travelers seeking everything from city apartments to island villas.
ABNB generated $12.2 billion in FY 2025 revenue at 83% gross margin, reflecting the asset-light model where Airbnb earns service fees from both hosts and guests on every booking.
The story begins in 2008 in San Francisco. Brian Chesky, Joe Gebbia, and Nathan Blecharczyk founded Airbnb after renting air mattresses to design conference attendees to cover rent.
COVID-19 nearly ended Airbnb. The company raised $2 billion in emergency debt and cut 25% of its workforce in spring 2020. It IPO'd on NASDAQ in December 2020 at $68.
Post-COVID, Airbnb pivoted toward long-term stays. By 2025, stays of 28 days or more exceeded 40% of nights booked, a fundamental shift from the original short-stay model.
America's markets, the United States, Canada, and Latin America, generate approximately 55% of revenue. Service fees are charged on both the host side and the guest side of every booking.
Europe, the Middle East, and Africa generate roughly 30% of revenue, while Asia-Pacific contributes 15%. International markets are the primary unit growth driver as U.S. penetration matures.
Gross margins run 83% in FY 2025, among the highest of any consumer internet marketplace, reflecting the zero inventory model where Airbnb holds no real estate.
Revenue grew 10% year over year to $12.2 billion in FY 2025. Operating margin reached 21%, demonstrating the asset-light model scales efficiently at this level of gross booking value.
Booking Holdings, Booking.com and Priceline, competes directly in online travel with stronger European penetration and hotel inventory. Airbnb's home and unique property supply is the primary differentiator.
Expedia Group, Vrbo, and Hotels.com is the primary U.S. home rental competitor. Vrbo focuses on whole home family rentals, while Airbnb competes broadly with hotels through its rooms product and listing diversity.
Airbnb's moat is supply-side density. 8 million active listings across 220 countries creates a selection advantage that competitors cannot replicate without years of host acquisition at scale.
Airbnb has over 8 million active listings across 220 countries and regions. More than 350 million lifetime guest arrivals reflect the global scale of the two-sided marketplace.
North America is the largest revenue market. Europe is the most densely supplied region per capita. Asia-Pacific, particularly Japan and Australia, is the highest growth geography as outbound travel accelerates.
Brian Chesky co-founded Airbnb in 2008 and has served as CEO since inception, guiding the company through COVID near insolvency to becoming the defining global short-term rental marketplace.
Chesky's design background at the Rhode Island School of Design shapes Airbnb's product obsession, the bet that exceptional user experience, not lowest price, is the right competitive moat for a marketplace.
Airbnb, the world's largest short-term rental marketplace, $12.2 billion in FY 2025 revenue at 83% gross margin, with long-stay travel and international expansion as the compounding growth vectors.
Q1 2026 delivered a revenue beat at $2.7 billion, up 18% year over year. Gross booking value of $29.2 billion topped estimates. The full episode covers margin trajectory and supply growth.
Airbnb reported Q1 2026 revenue of $2.68 billion, up 17.9%, beating estimates. EPS of 27 cents missed the 30-cent target. The defining number, $1.7 billion in operating cash flow from a company with zero long-term debt. This is Charged Alpha.
And I'm Lana. Q1 is Airbnb's seasonally weakest quarter. Travel is summer-weighted, $1.7 billion in operating cash flow before peak season. That is today's story.
Airbnb is the world's leading short-term rental marketplace, founded in San Francisco in 2008 by Brian Chesky. The platform connects hosts in over 220 countries with guests seeking homes, spare rooms, and unique stays. Unlike hotel chains, Airbnb owns no property. It earns a service fee on every booking that flows through the platform. Market cap, $87.2 billion.
The key structural fact: $7 billion in cash, zero long-term debt. Net cash position of $7 billion. For a cyclical travel platform, that fortress balance sheet is a genuine competitive moat, funding buybacks and investment without touching capital markets. Trailing 12-month free cash flow of $6 billion at an $87 billion market cap yields approximately 7% on free cash flow.
Q1 2026 revenue, $2.678 billion. That is 17.9% growth over Q1 2025's $2.272 billion. The $2,620 consensus was beaten by $58 million, a revenue beat despite the weakest seasonal quarter. Gross profit, $2.097 billion, a gross margin of 78.3%. For reference, Airbnb's gross margin runs 5 to 8 points below its peak summer quarters, which approach 86%. The off-peak dip reflects fixed payment processing and customer support infrastructure running at lower utilization.
EPS, 27 cents actual versus 30-cent estimate, a 10% miss on earnings per share. Net income of $160 million on revenue of $2.68 billion equals a 6% net margin. Operating income, $86 million, operating margin 3.2%. Q1 operating margin is always compressed. In Q3 2025, operating margin reached 39.7%. Seasonal compression of 36 margin points from peak to trough is the structural pattern of the Airbnb business model.
Now the star number, operating cash flow of $1.708 billion in Q1 2026 alone. Trailing 12 months free cash flow, $6 billion. At an $87 billion market cap, that is a 7% FCF yield. In a quarter that is seasonally the weakest of the year. Cash flow is front-loaded because guests pay at booking, hosts receive payment after the stay, creating a structural float that peaks in Q1 and Q2 as summer travel is booked months in advance.
Revenue history for context: Q1 2025 $2.27 billion, Q2 $3.1 billion, Q3 $4.095 billion, Q4 $2.778 billion, Q1 2026 $2.678 billion. The seasonal pattern is clear. Q3 is peak, Q1 is trough. Q1 2026 at $2.68 billion exceeded Q4 2025's $2.778 billion. A notable comp, since Q4 includes holiday travel. Year over year, every quarter in 2025 showed 17 to 18% growth. The growth rate is durable across seasons.
Forward estimates. Q2 2026 consensus revenue is $3.2 billion, EPS 1.20. Q3 2026, $4.2 billion revenue, EPS 2.40. Full year 2026, $12.8 billion revenue, EPS 5.80. Full year 2027, $14.2 billion revenue, EPS 7.10. At the current price of 140.46 and forward 2026 EPS of 5.80, the forward PE is 24 times. A premium consistent with a platform business, compounding revenue at 17 to 18% annually with no debt.
The primary bull catalyst is AI-powered search and personalization. Airbnb's search algorithm now incorporates guest preference signals, past bookings, neighborhood preferences, group size patterns, to surface listings that convert at higher rates. Higher conversion means hosts earn more per listing and guests find their match faster. The virtuous cycle compounds supply and demand simultaneously. Management called out AI-driven matching quality as the primary product investment for 2026, not a future feature, an active revenue driver in Q1.
Supply growth is the second bull pillar. Airbnb's co-hosting expansion unlocks a new category of hosts. Property owners who want passive income without the operational burden can now pair with experienced co-hosts who manage the day-to-day. This expands the total addressable supply base beyond self-managing owners. Long-term stays, defined as 28 nights or more, are growing faster than core bookings and carry lower customer support costs per night stayed. Enterprise and business travel is a third unlocked segment. As remote work normalizes business trip flexibility, Airbnb monthly stays are increasingly expensed on corporate cards.
International expansion adds structural upside. Southeast Asia and Latin America have travel growth rates exceeding developed market averages by 5 to 8 percentage points annually. OTA penetration in these regions is a fraction of European or North American levels, meaning supply onboarding is the primary growth driver, not market share battle with existing competitors. Airbnb's experiences platform, local activity bookings alongside nights, is scaling alongside core lodging. Experiences carry high gross margin and deepen host-guest relationships in ways hotel platforms structurally cannot replicate. The platform model in the off-season shows it earns nearly $2 billion in operating cash flow before summer even starts. The bull case is simply that summer delivers as seasonality predicts.
The EPS miss breaks the streak. 27 cents versus 30 cents is a 10% shortfall in the weakest seasonal quarter. Off-peak periods expose Airbnb's fixed costs. Trust and safety, customer support, and payment infrastructure don't scale down with booking volume. If margin pressure extends into Q2, the 580 FY EPS consensus is at risk.
Regulatory risk is the structural bear case. New York City's host registration law eliminated most ABNB inventory when enforced in 2023. Paris and Barcelona have similar restrictions. If European cities tighten enforcement before summer 2026, supply compression in high ADR markets hits revenue directly.
Consumer confidence has softened on tariff uncertainty. Discretionary travel cancels faster than other spending in a slowdown. Booking.com and Vrbo are investing in direct booking loyalty programs that pressure Airbnb's take rate in contested markets. Bear case resolution, a Q2 miss would confirm the trend.
Risk 1. STR regulation is accelerating globally. Barcelona banned new short-term rental licenses in 2024. Amsterdam caps annual host nights. The trend favors hotels and long-term landlords over platforms. Airbnb lobbies for proportionate regulation with mixed success. City-by-city supply concentration is not disclosed at the granularity investors need to size this risk.
Risk 2. Competition for professional multi-listers. Booking.com's host dashboard tools compete directly with Airbnb's interface. Vrbo targets the whole home vacation rental segment Airbnb serves. Professional hosts, managing 10 to hundreds of properties, switch platforms for lower fees. Their loyalty is driven by fee structures and analytics, not the consumer brand that protects individual hosts.
Risk 3. Valuation at 8.2 times revenue and 30.5 EV to EBITDA leaves no room for error. The stock is already down 8.2% year-to-date from a 52-week high of 175. A Q2 revenue miss could compress the multiple from 28 forward PE toward 20, implying a target in the low 120s.
Balance sheet, cash $7.0 billion, long-term debt 0, total equity $4.7 billion, current ratio 1.8. Enterprise value is approximately $80 billion. The business trades at 13.3 times trailing FCF on a platform model with no physical asset base, growing revenue at 17 to 18% annually. Return on equity, 41%.
EPS streak broken. Q1 through Q4 2025 were 4 consecutive beats, 25 cents, 104, 225, 56 cents, all above estimates. Q1 2026 at 27 cents missed the 30-cent target. One miss after 4 beats is why the stock reacted negatively despite the revenue beat. Market's price pattern breaks, not single quarters.
OCF of $1.7 billion versus net income of $160 million illustrates the float mechanics. Guests pay at booking, hosts are paid after the stay, generating cash well above reported earnings. At $6 billion trailing FCF and $7 billion cash, Airbnb has peak financial flexibility to fund buybacks and product investment.
Options market context heading into Q1 results. Implied volatility on near-term ABNB contracts was elevated, consistent with earnings period positioning. The stock's beta of 1.21 means it amplifies broad market moves. With the S&P 500 under pressure year-to-date, ABNB's negative 8.2% YTD performance reflects both the market headwind and the valuation reset from its 52-week high of 175.20. The 50-day moving average sits at 148.30 and the 200-day at 150.80. The stock is currently trading below both, a technical configuration that often marks mean reversion setups for fundamental investors with a 3 to 6 month horizon.
Analyst price target, $168, 19.6% upside from the current $140.46. Analyst Consensus breakdown: 8 strong buy, 22 buy, 18 hold, 2 sell, 0 strong sell. 86% of covering analysts recommend buying or holding. Brian Chesky's closing statement from the Q1 earnings call, that the platform model is durable even in the seasonally softest quarter, was the clearest signal of management confidence. Insider activity has been limited to routine plan sales. No material discretionary selling has been disclosed at these price levels relative to the 52-week high.
Bottom line on Airbnb. Q1 2026, revenue beat, EPS slightly missed, and operating cash flow of $1.7 billion in the weakest quarter proves the model works off-peak. Zero debt, $7 billion in cash, and a platform compounding at 18% annually. The near-term catalyst is Q2 execution. Watch the revenue print against the $3.2 billion consensus. Summer is where Airbnb earns its valuation.
30 analysts cover ABNB. 8 strong buy, 22 buy, 18 hold, 2 sell. Average price target 168, 19% upside. The bull case from the buy side: AI personalization, co-hosting some supply growth, and FCF compounding justify the premium. The hold side concern: EPS miss breaks the beat streak, and regulatory risk in key European markets remains unquantifiable going into peak summer. Watch Q2 for resolution. This episode is for educational and entertainment purposes only. Nothing discussed here constitutes financial advice or a recommendation to buy or sell any security. Charged alpha may hold positions in companies discussed on this show. Always do your own research and consult a qualified financial professional before making any investment decisions. Past performance does not guarantee future results.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.